Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's day is January 29th. We're heading into January 30th. I'm going to do 6 currencies in 6 minutes. You think I can do it? I don't, but I'm going to try anyway. Let's get going because we've got a lot to do. We're going to take a look at the euro versus US dollar to start off with. And you see this blue line right here? This blue line represents the 100-hour moving average. It's starting to move up a little bit, isn't it? We fell a little bit below that blue line in the Asian session around this time yesterday. Could not sustain any momentum to the downside, no. So the market started to rotate back to the upside. We did find resistance against around the 72 to 88 level. Actually got up to around the 68 level in trading here today. The 72 level corresponds with the low going back to November of 2003. That's this low right here. So the market couldn't get below that or above that low, and the market started to rotate back to the downside. Where do we find support? Near the 100-hour moving average, and we've been moving up for the last 4 or 5 hours since that time. So there's a little bit more of a bullish momentum here in the euro versus US dollar off of that 100-hour moving average. So we'll see if the market could get out of this range that we've been in for the last couple of trading days here, get above the 72 level, maybe above the 88 level, maybe above even the 200-hour moving average on the top side around the 114 level. Wouldn't that be a nice way to end the week? But we do have GDP coming tomorrow, so we'll see how that all pans out. On the downside, we know where our risk is. Our risk is going to be this 100-hour moving average. We need to get and stay below that level in order to keep the bears in charge. We have not been able to do that in the New York session. At least we went a little bit below it and then came back up. So we need to see a move below that level in order to push this market to the downside. That's going to be our key level in trading over the next 24 hours. Let's take a look at the dollar versus yen, and this currency pair has been up and down and up and down and up and down and up and down and up. And down at the bottom we have this little this area right here where we have a number of different lows coming into play, and on the top side we have this area right here. We have a number of different highs coming in play. And in between is where most of the value has taken place in trading this week. In between and kind of in the middle is the 100 and 200-hour moving average, and we also have this trend line connecting our most recent highs. And you can see we went a little bit above it in afternoon trading in New York session here today, but no momentum, no closes above that level, and so we're seeing a little rotation to the downside. If we're going to go higher, we need to get and stay above that level, don't we? We need to get above this level around the 118.42 level and stay above that level, and then we're going to start to deal with these highs right here. If we're able to ultimately get above the 118.85 level, then it should be open season to the upside, or at least that's what you'd expect. If we can't get above those levels and we start to rotate to the downside, any move below the 100 and 200-hour moving average is going to move us to the bottom side of this range right here, and then we start to looking toward our low areas and do the same exercise there. Sell high, buy low, but make sure they have a stop above the highs or below the lows, because the market should trend at some point. Non-trending leads to trending markets. Let's take a look at the sterling versus US dollar next, and this currency pair was all about the 100 and 200-hour moving average. Also about the 50% retracement of this move down from the high that we saw on January 14th down to the low that we saw on January 23rd. When the market fell below this area right here with all that stuff together, we saw the market sell off rather quickly in the next 10 minutes of 2 hours of trading, I should say. We fell below the 150.33 level, which I had earmarked as a low area for support, but the market then rebounded back to the upside. Guess what level is going to be a key level if we to go up and test it? This 151.09 level. Do you have a reason to go long the sterling versus US dollar? I think so. A little bit more positive out of the UK as far as data goes. A little bit about that maybe a tightening still in play for that currency pair in 2015. It's better than the euro, so that may lead to a move back to the upside here in the sterling against that 150-ish type level. Again, got down to a low price here today of about 157.17, so pretty close to that 150 level. I saw the move back to the upside. Let's take a look at the dollar versus Canada, and this currency pair is I'm putting it on the monthly chart here. Why? Because if you take a look at the 2002 high and go to the 2007 low, the 50% retracement comes in at 126.26. Can you remember that number? 26.26. So and where are we at? We're currently trading at 126.20, just below the 126.26 level. So guess which level is going to be important in trading here today? 26 level. Stay below. It's more bearish. Move above it, and we may be looking a little bit more bullish again for the dollar versus Canada. We've been in a moon mission to the upside since the Bank of Canada cut rates and the surprise move last week. Continue to move to the upside, and in trading here today, we extended above this topside trend line here, on our way to our high price, which came in at the 76 level. Over the last 4 or so hours, we've been below that 26 level, and we're going back up there trying to test, and we do have this little trend line here that we broke earlier today that we need to get below. So see this little point right here, right there? We need to either get below that level or move above that level, and it's as simple as that for the dollar versus Canada. Aussie versus US dollars, our next currency pair. And again, I'm going to go on the monthly chart here. Why? Because you see this 200-month moving average. It's a blue line chart, comes in at 77.79.7. Lots of sevens in that. It's like the 26 level, right? So let's call it 77.80 level. I'm currently trading at 77, what, 57 or 58. So we are below that 77.80 level. Here's that line on the hourly chart, and we tried to find support against this level in trading here today when we fell below. We moved to our low price for the day, which came in around the 19 level. Now we need to get back above that 80 level. If we can't get above the 80 level, we ain't going higher. So look for sellers against that level. If it goes above it, stop yourself out. Look for the reversal to the upside for that currency pair. And finally, let's take a look at the New Zealand versus US dollar. Let's count the points. 1, 2, 3, 4 or so points on the top side. 1, 2, 3, 4 or so points on the downside. On our lows here today, like our highs here yesterday, we found the bottom side trend line, just like we found the top side trend line here. And we're bouncing off of that level right there. It's as simple as, well, either we stay above that level or we move below that level and move lower. If we stay above that level, we have a chance to correct. But don't look for I don't expect the market to move back above this line right here. This is a low, and this is a 100-hour moving average. We should stay below that line at the minimum, and I expect the market to sell off probably before that level. So watch for sellers right around this level, actually, for the New Zealand versus US dollar. All right, what do we have coming out over the next 24 hours or less than 24 hours? We do have the we have Japan CPI coming out tonight. We have Australian PPI coming out as well. We have German retail sales coming out tomorrow, along with Euro Flash CPI estimate. It's going to be horrible. We have employment rate coming out of the Eurozone, again, not too great. We have GDP coming out of Canada at 8:30, and also USGDP, big release, fourth quarter GDP tomorrow at 8:30. That's going to be key as well. Chicago PMI and University of Michigan revised consumer sentiment finishes our day. Over the weekend, we do have manufacturing PMI coming out of China, non-manufacturing PMI coming out of China as well. So you people in the Australian versus US dollar or any Australian currency pair, you have weekend risk there in that release. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.